I just talked for about half an hour. I know Doug did also. And I think that it's important that when we're going to talk about Doug's views of the economies of the world, the markets, different countries, different regions, that we set a bit of a stage, Doug. And I know that you have spoken already, but I take a look at your views. I read them quite often, and I've talked with you on panels before. So I know basically where you're coming from, but I think very important that our audience also shares, or at least you share with them some of your views. And I know that you think that Europe, and I'll use my word, is a bit of a basket case, but can you just give me a few minutes on what you think of Europe? And is there any chance that the European nations are going to internally solve their problems, or at least put a patch on them in order to delay what might be coming down the road?
Well, I'm a long-term bear on Europe. That continent has been going downhill since the First World War, and I think its progress is still intact. The real reason for the collapse of Europe is that it's been totally overcome and overwhelmed by mistaken and destructive ideas. And about the only thing that they've been successful in is warring and exporting these ridiculous ideas to third world countries who tend to buy every ridiculous notion that comes down the pike from Europe. So Europe, socialism and collectivism, statism, are just ingrained in Europe. And as long as that's the case, I just don't see that the place is going to improve economically. The good news is that some of these governments are starting to collapse. Like they talk about the collapse of Greece being the first one, and they'll all collapse. Italy, Spain, Portugal, Ireland, France is going to go, and actually Germany too. None of these places work. They all believe in a way of relating politically. They all believe that the state is a cornucopia. They're all trying to live off of each other. So I don't see any hope for Europe. What's going to turn it around? And as I just mentioned in my speech moments ago, the problem is there's a gigantic amount of debt all over the world, but on that continent too. And debt means that you've been living above your means, just as savings means that you've been living below your means. And when you have debt, it means that you've either borrowed from capital that's been produced in the past and are consuming it, or you're mortgaging yourself against things that you hope to produce in the future. So this problem's got to be solved, but they're not doing anything to solve the problem. Greece, for instance, has more debt now than it did before the crisis started, and so no, I don't see any hope for Europe economically.
You're talking about change, and the change that we've seen becomes counterintuitive because basically we're going from right to left wing. The change in France went from Sarkozy to Hollande. We're seeing the left in Greece come up. So change in this case can't be any good, can it?
No, it can't. But let me make a distinction that I think is very important that most people overlook. I think this is critical. Mike, you just used the terms right and left wing. Now, what does that mean, right wing, left wing? Let's define these words. What is a leftist? I guess a leftist is one that believes in political control of the economy, but he says he believes in free speech and free love and social freedom, okay? And what's a rightist, generally, as it's defined? Well, he doesn't believe in those things, and he believes you ought to have religion and you ought to be socially uptight, but he says he believes in a free economy. Of course, these are both lies. I mean, the leftists definitely don't believe in a free economy, but they really don't believe in social freedom either. That's a lie. And the rightists definitely don't believe in social freedom, but they really don't believe in economic freedom either. It's actually, you got to look at this as being not a left-right thing. That's an incorrect way of looking at it. You've got to look at it with an X and a Y graph, not just left and right along the x-axis. You got to put a y-axis in where the y-axis might be social freedom, ranging from 0 to 100% social freedom, and the x-axis is economic freedom, ranging from 0 to total freedom. So down here, where there's 0 freedom, you've got like the communists. And actually, the Nazis are better than communists. But the Republicans are here, the Democrats are there. I believe in total freedom, both economically and socially, which makes me a libertarian. But actually, more than that, it makes me an anarchist, because I don't believe in the right of the state to exist. And I'd also like to point out, that's another word that's used totally improperly. You have all these complete idiots calling themselves anarchists. And they don't even know what that means. An anarchist is somebody that doesn't believe in the right of the state to rule the individual. That's all. It doesn't mean violence. It doesn't mean destructive. It doesn't mean running around in black and breaking windows with the short fuse little brown bomb. It's got nothing to do with anarchy as a philosophy. And that's one of the reasons why people recoil when the word anarchy is used, because they associate it with these morons who are not anarchists. They're generally statists, collectivists. So.
Okay, so we have this change coming in Europe, which, in talking to you just the last couple of sentences, is not going to make, the political change is not going to make any significant difference whether you're left or you're right.
No, not at all. No.
But the fact is they're in huge trouble in Europe, so let's just come across the ocean, because so many times when I've spoken with you in panels or talked to you, you seem to zone in on the United States more than anywhere else in the world as far as the difficulties that are going to emanate from the U.S. and spread their tentacles, but I'm throwing Europe in the mix. What happens when you mix the two, and have you changed at all with what's going on in the U.S.?
Well, there are a couple things, there are a number of things that distinguish the U.S. from all other countries in the world. Number one, I'm taking this not in any necessary order, is the U.S. dollar is the world's reserve currency. Everybody uses dollars. There are about nobody knows exactly, but there's about 7 trillion U.S. dollars outside of the United States. So this has been a gigantic advantage to the Americans. They can get Sonys and Mercedes and everything imported, cocaine, everything imported in for essentially zero cost. They just pay them with dollars that are printed up. So that's coming to an end. That's a big difference that the Americans have. Second thing is they have this gigantic, bloated, dangerous military. As you know, the Americans, half of the military spending in the world is from the United States. And this is a huge drain on the economy. And not only is it a gigantic economic drain on the economy, not even counting the wars, but it's creating lots and lots of enemies around the world. Nobody likes foreign soldiers, especially foreign soldiers, heavily armed teenagers from a different culture, going around and breaking down your door in the middle of the night. So that's the second big difference with the U.S. And people say, well, the U.S. is special because it's the home of freedom. It used to be. That was back in the days when it was America. And America was a wonderful idea, and actually a unique idea in the world. But America's dead. I mean, it doesn't exist anymore. We just have the United States, which is just one more corrupt nation state. So,
well, if that's the case, and I'm not going to, or I think you're not going to hear many objections to the broad view that you're putting forward, then how does the U.S. continue to maintain its status as the world's reserve currency? Look, we've seen the U.S. dollar go up very significantly in the last year. every commodity drop, Doug, gold, silver, precious metals, the energy sector. We've seen stock markets drop, yet investors keep going towards the US dollar. Can the US dollar maintain its status as the world's reserve currency? One, and two, and I'd like to hear both answers, if they aren't, who will be?
Well, no, it's not going to maintain its status as the world's reserve currency, and you can already see this happening. The Indians and the Iranians are trading, not using the US dollar, because, of course, the Iranians can't use the US dollar because the Americans have idiotically cut them out of the SWIFT system, so they can't transfer money electronically. But they still have valuable things that they want to buy and sell. So they're trading with India and China using their currencies. And now the Chinese and the Japanese are trading without the US dollar, as are the Chinese and the Russians. So the dam is breaking. Listen, it's idiotic for like China and Russia to trade with each other and have to use dollars issued by their mutual enemy government that have to clear through New York to trade with each other. It makes no sense. But at the same time, why should they trust each other? Because neither of their currencies are any good, quite frankly. I think China's going to be the next big problem area in the world, actually. So what are they going to use? Well, they ought to use something, a medium of exchange and a store of value, that they don't have to rely on the other guy's good intentions. So I think they're going to go back to gold. That's what's going to happen.
All right, so what you're saying to our audience is that we're going to come off the US dollar standard, whether it's a year, 5, 10, for how long it takes, but there's not going to be a currency? How about a basket of currencies?
No,
or gold?
Why is a basket of currencies just worthless pieces of paper created at random, at will, by governments? Why is that any better than a single currency? Why is the euro better than the Deutschmark was, for instance? It's not, it's worse. It's a who owes you nothing. That's what a basket of currencies is, as opposed to a simple I owe you nothing. So no, they're not. They're going to go back to gold. Now, I think that's good news. The bad news is that these governments, you have to understand that governments act in their own interests, not necessarily in the interests of the people that live in the country they control. So I expect what's going to happen is that gold will be used for trade between countries, but they'll want to maintain their monopoly of fiat money within their country.
Well, I mean, the gold's got to be valued in something. As far as we, human beings, are concerned, we have to put a relative value. So you can tell me gold's worth, well, it's worth $1,700 an ounce, $1,700 or 1,300 euros, or there still has to be, we're not going to be shaving off pieces of gold, are we?
No, I mean, look, the standard gold coin around the world is a 1-ounce coin. Now, how many ounces of gold exist in the world today that are mined and above ground? Well, nobody knows really, but it's probably about 6 billion is the best number I can come up with. And then you got to figure out where it is. Central banks disclose how much they own, and the IMF has been given so much and so forth. But essentially, out of that 6 billion ounces, I think, of gold, what do the central banks own? They own about 1 billion ounces, and the rest is out there in various places. So at $1,000 an ounce, that's 6 trillion. At $10,000 an ounce, that's 60 trillion. Then you look at the number of dollars in the world, you look at the value of the stock market, the real estate market. I think in order for gold to be used on an international level, you look at the number of dollars in the world, the number of dollars outside the I'll arbitrarily come up with $10,000 an ounce as a number that would be a market clearing type of number.
Okay, so you've got these problems. We've seen them in the last year. We've seen Europe absolutely, as we talked of first, sinking under their own weight. We've seen what's happened in the US. Yet when I take a look at the price of gold for the last 6 months to a year, They consider it a risk investment, as the stock market is, as commodities are, as oil, as other currencies. What will, and I'll use the same word, give currency to gold that it doesn't have right now?
Well, that's a good point, Mike. You guys here in this audience are a special group. You actually know something about gold, and are at least vaguely sympathetic to it. But the average guy out there, gold doesn't even exist. I'm not even sure if he knows it's on the periodic table of elements. I'll give you an example of this. There was a video on YouTube a few years ago where it had a guy in a beach town, someplace in the U.S., California, Florida, I forget where, and he had a 1 ounce maple leaf. And he went up to various people. These weren't bums, or they were, average middle class, even upper middle class people. And he put the maple leaf in his hand and he said, "I want to sell this. Would you give me $50 for it?" He didn't get one taker. I mean, that's how much knowledge and interest there is in gold today. It's been promoted by people like Warren Buffett as an anti-investment. And of course, it's not an investment. Gold is not an investment. Because remember, I go back to the definitions of these words, so we're all talking about the same thing. An investment is an allocation of capital to productive enterprise that will grow. So no, gold's not an investment. Gold is money. Okay, it's a medium of exchange and a store of value. It's not an investment. So there's no knowledge on the part of the public of gold, no appreciation on the part of the public in gold. But that's good, because if they don't own gold, there's only one thing they can do relative to gold, and that's buy some. And I think as chaos starts hitting in the years to come, and panic, and very high levels of inflation and so forth, more and more people are going to figure it out and start buying. So it's going to be a gradual thing, Mike.
Well, okay, so we're talking physical, but let's go over to the equity markets, and let's talk about gold there. We've seen, well, maybe there's a little glimmer right now of the gold stocks starting to move, but certainly you don't see and haven't seen the reflection in the gold stocks that you've seen in the price of gold, never mind the last 6 months, over the last couple of years. So we're not, Doug, getting this correlation.
No, we're not. And of course, you can invest, technically speaking, in gold stocks. That can be done, but you can't use Graham-Dodd methods to invest in gold stocks. That's why Warren Buffett doesn't invest in gold stocks. It's too unpredictable. Prices of gold relative to other things can fluctuate too radically. There's too much unpredictability for most gold mines as to what's there. It's unlike an ordinary business, which theoretically can keep going forever and growing forever. Gold deposits run out, and you got to find another one. So they're tough as investments. It's best to view gold stocks as speculations. That's what it's best to view them as.
Even seniors, when you're looking at the seniors?
Yeah, even seniors. In fact, I don't like senior gold stocks, and I tend not to own them. And the reason is that the senior gold stocks today, most of them, are not owned and controlled by the founders of the company. They're controlled by brain-dead bureaucrats that, like all big companies, they're guys that have proved better at political backslapping and backstabbing than they are at actually growing and running a business. I like companies that are run by original entrepreneurs, if possible. Unfortunately, most of these companies out here are run by the original entrepreneurs, and most of them are complete crap that don't mine, and there's speculations on whether they'll win an Easter egg hunt or the hunt for a needle in a haystack of a viable deposit. But, with all these caveats, no, I don't like the big companies, generally speaking.
All right, so we have an election coming up in the U.S. this year. we have gold that surprised me, and I watched this market, have been for 43 years now. On Friday, absolutely shocked me because of the fact that when you have these crises, people have been selling gold and buying US dollars. And as we get closer to November, do you see a little more of people saying, all right, I just don't want US dollars, I'm afraid of what's going on there? Maybe a little move up in gold and maybe some more confidence coming back into it. And the US election, is that going to send a fear tremor throughout the world as it comes forth?
Well, will there be a fear tremor? There's no discernible difference between Obama and Romney in their views. Nothing at all. I mean, name an area where they're, based on their past actions, they're any different. I mean, we got Obamacare, but then Romney was close to unique among governors in the U.S. in putting in Romney Care, which is very similar in Massachusetts. If anything, Romney's more of a warmonger than Obama is. He's a typical Republican. He talks so a little bit of free market talk and so forth to make that wing of the Republican Party happen. But he's a statist, a collectivist through and through. And other than that, he doesn't have any stable economic or political views. So they ought to already be afraid.
And what happens with the U.S. debt now? $16 trillion, no sign of it going down. At least we here in Canada are paying off debt, and we in fact are going to be less in debt this year than last, which is something that's not going on south of the border. It's not happening in Europe. So I keep going about, where are we going? Where are we as a society going? Where are we going with our ability to invest, to have a pension plan, to plan our lives? I mean, talking to you, and I have before, doesn't give me a settling feeling.
No, and I wouldn't feel so good about the Canadian dollar either, because although what you say is true, what are the assets of the Canadian Reserve Bank? Well, they sold all their gold, basically at the bottom of the market. So the major asset of the Reserve Bank is US dollars. So what happens to the US dollar has a very direct effect on the value of the Canadian dollar. And what happens to the US economy has a very direct effect on Canada, because it's by far the largest trading partner with Canada. So I don't think there's any reason to be sanguine here in Canada, in addition to the fact that the real estate market here in Canada is, at this point, probably the most inflated in the world. And it's going to come off, and come off hard, I think. So I don't see any particular reason for optimism here in Canada. It's like, best thing about Canada is it's not the U.S.
Well, you know, that's not bad. But so let me put this to you. I'm sitting here, I'm semi-retired, shall I say. I've got a nest egg, not unlike a lot of people here, and I talk to you, and I have before in panels, I start to get concerned about, how am I going to live from here to there? I mean, what are you doing, Doug, that is so different than what all of us should be doing and are doing? Because we really have to earn, we have to spend dollars, we have to have that income coming in, and we have to live in this country or that country or whichever country. How do we play this game?
Well, I can tell you what I've done and will likely continue to do. I moved to New Zealand in about 1998. Why did I do that? Well, I've been to 175 countries. I've lived in 12 at this point. But why did I go to New Zealand, for instance, in 1998? Because I was there on a trip. At the time, I was playing polo. That was the big thing in my life, was playing polo. I mean, it really helped me destroy my body totally. But I enjoyed it. And when I went to New Zealand and played some polo, I found that it cost me about 10% what it cost me to play polo in Palm Beach, and it was more fun. And I looked around, and if I went to a restaurant and had dinner, I felt like I should put on a mask as I was paying the bill because it was so cheap. Real estate, everything was really cheap. And I said, wait a minute, it's time for me to move to New Zealand. And I did. We bought a lot of real estate there and so forth. And what happened? Since then, the currency has doubled in value against the US dollar, and the real estate has doubled to tripled in value. So I got paid for going to New Zealand and living there and playing polo, okay? But now, New Zealand's no longer a good value anymore. So it's time to drive on and go to the next place. Where was the next place for me? Well, it was Argentina. And when I first went to Argentina, it was just after they had this major crisis in 2002. I mean, I'd been going there since the 1980s. But really, at the same time I was still in New Zealand, I started moving into Argentina. And Argentina was even cheaper than New Zealand. I mean, how cheap was it? You could ride any place you might want to go in Buenos Aires for less than $2 as a taxi fee. A great steak dinner with a fantastic steak, all the trimmings and wine, $5. I mean, it was free. And real estate was priced appropriately, so I moved into Argentina. And I've been paid for living in Argentina with depreciation. It's a lot of problems and so forth, different situation from New Zealand, but it was a great place to go. Now at the moment, Argentina is not, well, it's cheap, but not like it was then. So I'm always looking for a new place to go. So you can capitalize on this type of thing. I think staying here in Canada, which is extremely expensive, certainly in terms of property prices, is a mistake. If your house is, if you consider it a major financial asset, and like I said in my speech, it may be a financial asset, but it's basically a very expensive consumer good. And your house is really like your car, or your suit, or your toothbrush. It's a depreciating asset. It's not an investment. It doesn't produce new wealth. I would hit the bid yesterday morning while the market's still here, and look for another place that's groovy and nice to be, where you're paid for living there.
Well, that's all very well and good, but I could ask for a show of hands of any of you who could pick up now and just leave Canada as Doug left the US, and I bet we wouldn't get any hands. So it's not how we survive by leaving, Doug. How do we survive by staying?
Oh, wait a minute. Listen, if it makes sense for an American to do what I'm talking about, it makes more sense for you as Canadians to do that, because Americans are like indentured servants to the US government. You leave the United States, and even if you never come back, you are obligated to pay taxes just as if you were living there. And you have to obey by all the reporting rules, which are onerous, and becoming worse all the time. You don't have to do that as a Canadian. Unless you got a job that, forces you to be here and you can't do better. I mean, I don't see why you're living here. I mean, it's a nice place. I used to live here. I think it's a great place to live. But apropos of what I was saying before, you people are in much better position to bail than Americans are.
Easier said than done, I would say.
I know. I guess it's because most people have that medieval peasant attitude. I mean, most people are like vegetables. They're planted someplace, they grow there, but being a vegetable is not a good survival strategy for a human being. So I would change your way of thinking.
All right, so let's carry on. Commodities, which is what our economy is built on, as is Australia, as is New Zealand. The manufacturing and export is gone from this country. Some would blame the Canadian dollar, but others would blame the real fact that our neighbor to the south is not buying as much as what they did before, and we're not as efficient. But what about the commodity boom that we have experienced over the last 10 years? Is this boom done because of where the world economies are going, or do you expect that we're going to pick up in the energies, in the agricultures, in the metals? Are the commodities going to come back?
Well, I'm ambivalent, to tell you the truth, right now. And let me tell you why I'm ambivalent about commodities. On the one hand, the longest bear market in history is the bear market in commodity prices. Because in primitive times, or even up to classical times, metals were extremely expensive. Finding them, refining them, working with them. The price of commodities has been going down, down, down with little bumps up along the way for roughly the last 10,000 years. And eventually the price of commodities, in my opinion, is going to approach zero. Now, how is that possible? Because with development of technology, things like nanotechnology, for instance, and space technology, there's infinite. The whole world is made out of commodities. It's just a question of segregating them and dealing with them. And that's going to continue. So on a long-term basis, I'm not a commodity bull. I'm a commodity bear. A trend that's been in place for thousands of years is actually likely to accelerate. So that's one point of view. But there are other things, too. Right now, when it comes to metals, and we mine metals. We mine things on the periodic table of elements. There's 92 elements and many millions of compounds. How do we get them? We mostly mine them. But it's harder and harder to mine today. Do you know that, I hope you've all seen the HBO series Deadwood. Everybody seen that? Oh, if you haven't, you ought to see it. It's about, it centers in Deadwood, South Dakota, about the time that exactly at the time the Homestake Mine was discovered. It's a fantastic series. But in those days, when the Homestake Mine was discovered, which for many years was the biggest mine in North America, do you know that people that bought that mine shortly after the discovery was made and it went into production, they were paying dividends on that mine that were equal to the original price of the stock that you could have bought? That doesn't happen anymore. I mean, it's very expensive at mining. Your legal team is as important or more important than your geological team today, and your environmental relations team and your investor relations team are as expensive as your mining engineers. And you know, it's the amount of slippage, and to put a mine into production today is like pulling teeth. Very risky, and governments view them as milk cows. And if environmentalists get too out of control, they'll view them as beef cows, just the way your government will view you, incidentally, if it has to. So, you know, mining is a crappy business, and it's gotten much, much worse over the years. Everybody hates mining. They think that metals and minerals and compounds, they think they appear magically or something like that. So I don't know.
But yet Casey Research is out there looking for and referring people to different areas of the commodity business or the mining business, looking for investments for people. Isn't this just a bit counter to...
It seems that way. There's only one reason to own these mining stocks, in my opinion, and that is that they're the most volatile class of stocks in the world. They're really more volatile than those internet stocks were 10 years ago. And volatility is your friend. I mean, don't confuse volatility and risk. They're two different things. Unfortunately, the mining stocks have plenty of risk as well as volatility. But I like a class of stocks that can go up 10 to 1 from the bottom to the top and then collapse 95% on the way down. Because if you can get with the rhythm of the market and get the right companies with the right management, you can make a lot more money than you can buying the shares of a blue chip like General Motors and hoping it goes up. So that's why I like them. Now, despite the fact that it's a crappy business and it's likely to get worse in the future. And I say it's likely to get worse because even though technology is going to keep improving and we'll be able to mine lower and lower cost deposits until we don't have to mine deposits anymore because they'll do the mining in the asteroids, and that may be closer than we think, it gets more and more expensive to mine. and not just for political reasons, but for technical reasons. More capital intensive, more time intensive, and so forth. It's a rotten business, but I'm not interested in the business, except on an academic matter. I'm interested in the stocks that represent the businesses, which are two different things.
Okay, so
I think now is getting to be the time when you ought to look to buy these stocks again.
well,
frankly.
this is my next question. Is we've talked about the markets getting beat up, particularly some of your mining stocks. Are you viewing this correction as a time to start buying A, physical again, and B, paper, the stocks?
Yeah, as I pointed out in my speech, back in 2002, when I wrote a number of articles saying that if I could call your broker and buy gold for you, I would. Back then, gold, I mean, think about this. Gold and silver were cheaper in real terms back in 2001 than they were before 1971, before the big devaluation, when gold was $35 an ounce. It was cheaper in real terms then. Now, since then, gold's gone up 6 times or something like that, 5 times, 6 times. Okay, so let's say that it's at the equivalent then of gold at $200 an ounce back in the 70s. Okay, but the economic situation is much, much more serious than it was back in the 70s. So no, I think you ought to buy gold now. I do, even
And
though
gold
it's not
stocks? And gold stocks?
and gold stocks. But remember, gold stocks are a speculation. They're ideally a leveraged way to play the gold price. And mining costs have gone up so much now that, of course, it depends radically on which company you look at, and which mine of the company, and where it is, and all this. But, you know, cash costs of production now are above $1,000 an ounce or higher in most places. So there's a lot of leverage in these things.
Yeah, but you would take a foray, and I mean, I'm trying to, pardon me, pin you down. At this level of gold, $1,630 an ounce, you would be a buyer spending your own money.
I buy gold every month. I get cash that comes in. What am I going to do with it? Leave it in cash in the bank? You know, everybody owns cash today. They're afraid of this, they're afraid of that. Everybody has cash. And to me, I can understand the intelligence of this from one point of view, because cash is really liquid. You can, like that. Gold is not liquid. You got to sell it and then get the currency. But, you know, everybody's in cash today. Banks are full of cash. People are full of cash that have. You know what? I think that this could be a real catastrophe, because when things change, and they can change quickly, everybody all of a sudden is going to want to get rid of that cash, and they're going to see that it really is trash. So
what's your end game? I can tell you, and I think I will tell you my end game. I accumulate gold, but I've got an end game. I've got a plan. And just because I want to bounce this and have you come back at me, my plan is eventually that gold is going to give me enough cash to buy a depreciated asset at a very, very reasonable price, because it will go up and the asset won't. But what are you? You're accumulating this gold month in and month out. I take it you've got family somewhere. What are you going to give them? Gold? Are you going to go out and buy property? Are you going to go out and what are you going to do with the gold? Gold, you can't eat gold.
yeah, right.
What are you going to do with
But
it?
you can't eat $100 bills either.
No, but $100 bills will buy you something to eat.
Yeah, well, gold can be changed for $100 bills, and in the future you will use gold.
But
In the
what are you
future,
going to
but-
do with your gold?
Well, let me answer that. I'm a big fan of Graham Dodd type investing, and I'd like to buy stocks in productive enterprises, but I want to do it at what I think is the right price. And let me give you some examples of this. Do you remember, because I do remember, that at the bottom of the market back in 1974, which was 75, was a disastrous bear market back then. Do you know that the value line index, which is an index of, I don't know how many stocks they had back then, 1,500 stocks, many of which yielded no dividends. American stocks, many of which yielded no dividends. The average dividend yield on the value line was 7.4%. A lot of stocks were yielding 10 or 15%. Do you remember back in the early 80s, like electric utilities? And I was a big buyer of those back then. I recommended them, wrote a lot about them in my book, Strategic Investing. Do you know the average electric utility was yielding in between 12 and 15% in current dividends back then? And the dividends have gone back up a lot. I'll give you another example. Do you know that in the mid-1980s, and I wrote about this in the newsletter, there were 3 stock markets in the world that were incredibly cheap. The Spanish stock market, the Belgian stock market, and the Hong Kong stock market. And all 3 of them were selling for below book value. We're selling at, this is true, check it out, it's unbelievable, we're selling for like 2 or 3 times earnings and had dividend yields. The market averages had dividend yields of over 12%. Now that was value. You know, there's no value like that out there today. I think the value will come in. You know, things go higher than you can possibly imagine, and they go lower than you can possibly imagine. But, you know, I'm not interested. I want to do what you want to do, Mike. I agree with you totally, but I don't really want to buy stocks until I think I can get a bargain.
Or property.
Or property.
Or whatever it is that you want to buy with it.
Yeah, it's like, look, I'll give you an idea. I mean, you've got to look around the world. If you're looking for value here in Vancouver to buy property, you're not going to find any. Like I said, I'd hit the bid yesterday morning on anything you own here if it's important to you, what it's worth. But I'll give you an example. I mean, the apartment I bought in Buenos Aires, which is one of the nicest cities in the world, it really is, you should visit. That apartment is 5,500 square feet. It's a 2-story penthouse, outside balconies, best part of town, 14-foot ceilings, you know, walls this thick, fantastic building. So what would you pay for a 5,500 square foot apartment of that size?
In downtown Vancouver, in the newer apartments, you'd be somewhere between $2.5 and $4 million.
Is that all?
Yeah, you can buy 5,500 for $4 million downtown Vancouver. Yeah.
For a 5,500 square foot apartment?
All right,
like that?
6 million. I mean, higher. All right, so I live. All right, 8 million. 10. Okay, 10 million.
Well, maybe 10. You know, in London or New York, you might pay 20
or 30. No, I've seen that.
Well, Buenos Aires is in a class with those cities. I paid $900,000. Now, and I have a full-time maid, and I pay her $400 a month, and she's very happy. You can't do that here in Vancouver.
No, you can't. No, you can't.
So, you know, this is all about your standard of living. So, I really like being paid for having a high standard of living. And when things change, maybe they won't change. It's Argentina, which, you know, the government there is totally insane. And they're going to blow the place up again. It won't bother me much. It won't. But, you know, if good luck strikes, like happened in New Zealand in the mid-1980s, when it was becoming the shallow end of the gene pool, because New Zealand was actually the first socialist country in the world, whether you know it or not. Back in 1903 or something like that, they started walking down that path. It was becoming the shallow end of the gene pool because anybody with any money and any brains used what money they had to get on a plane to LA or London or someplace to get the hell out of there. Then it got so bad, they had to change it. And it blossomed and property exploded. It might happen in Argentina. So I like having a high standard of living and getting paid and rewarded for living well. Doesn't that make more sense than, you know, paying a lot and then having your asset collapse in price on you as a bonus? I mean, that's the way I see it anyway.
So we're sitting here, and it's really, I mean, it's fun to talk to you and interesting to hear your point of view, which some I know, but some I'm hearing new things. But meanwhile, for the investor that's here right now and living here, let's bring this in and narrow it down, who's not going to move even though it would be the ideal idea.
Right.
What's your suggestions to them right now in order to keep it together, make it grow, and survive where you live instead of what you did?
That's a very good point, Mike. I think that you ought to make sure that you've got a significant position in precious metals, especially gold coins. If you don't own many or any, start buying some today. Not all at once. I don't know if it's not going to go down $100 or $200 or $500 an ounce. It's possible, but I think it's going higher. So remember, it's the only financial asset that's not simultaneously somebody else's liability, and you've heard the other arguments and so forth. So buy gold. It's one thing you should do. Buy a little bit of silver. Count on bubbles being ignited elsewhere, here and around the world. I think gold will turn into a bubble in the future, and I think there's an excellent chance all these crappy little stocks will become an epicenter of a bubble again, as they have so many times in the past.
So you can see the stocks that are on the out right now that people don't even want to take the paper on them, never mind to pay something to even get them for free. You can see another run in these stocks.
Yeah, I'm afraid a lot of these companies are going to go bust because their share prices are low, they're paying their managements too much. If they're going to refill their treasuries, this can be very dilutive. They're never going to find deposits. So try to buy the quality issues.
But if they go bust, that's a better opportunity for our audience to go out and buy, because that means that the choice is down then to a better group of stocks, does it not?
Yeah, but so many people are going to wind owning the stocks that go bust, and you put $10,000 in an issue and it goes to zero. That doesn't feel very good. But I think that this is a very volatile, speculative market. It's approaching the bottom. So look around for really quality companies that are well financed. Most important, observe those 8 Ps that we have. First of which is the people. So look for bubble, buy gold, look for bubbles.
And also, and here's the also, you're not just going to buy gold. In order to get into the survival mode and make it work here and pay yourselves and live a reasonable life, you've got to buy something else besides gold. Which other areas would you look at, even if only for a temporary basis?
I'm a fan of agricultural real estate. There are problems with that. And actually, I've gotten involved in the cattle business in Argentina for a lot of reasons that I've explained in the blog that I write, and I hope you all take that at kcresearch.com and in the newsletter. I'm a big believer in cattle, especially as an area to invest in. I don't think cattle are very good here in North America. I mean, you got long winters, they lose weight, you got to put away fodder to feed them, so forth. Land is expensive. Cattle are better in South America for a lot of reasons, but
the world, okay, so let's just zone in here. The world's got to eat. So you would, if not in gold, you would look at agriculture as being an area which you would direct investment.
I really am favorably inclined towards agriculture. So if you're looking for an area, I'm not saying you're going to make a killing on it, because farming is a hard and risky business. In fact, I don't know any businesses that aren't hard and risky. Anything from running a restaurant to starting a company, everything is hard and risky. I don't know why people do it. Why doesn't everybody just inherit money and retire? I don't understand that. But I kind of like agriculture. I really do.
Because no matter how we talk about where we think where you think the world's going to go, we all have day-to-day lives that we have to.
We need a lot. Jimmy Rogers is an old friend of mine, says this, and he's absolutely right. I mean, all these investment bankers and people shuffling dollars around, the whole financial industry is hugely overexpanded. It's a much, much larger part of the economy than it has any right to be. It's basically non-productive at this stage. I think it's really in for a collapse, the financial industry. And I think the world needs a lot more actually productive people, like farmers, for instance. So I look forward to farmers becoming multimillionaires and people in the financial industry becoming paupers in the future. That would gratify me to see that.
I'm just going to leave it at that because I like a gratified Doug Casey.
Yes.
Ladies and gentlemen, thank you very much.
Thanks a lot, everybody.